Good morning, Paul Georgie from Allendale, McHenry, Illinois. It's April 19th, 2010. Grain markets this morning are going to be under pressure for several reasons here this morning. The economic reasons and support from outside markets have disappeared here over the weekend. We got a dollar down, up 35. Crude's down over $2. Gold is down $3 to $4, and stock market's going to open lower. A lot of that outside news is being and weakness is coming from the fraud case that's brought against Goldman Sachs here late last week, and that has mushroomed here over the weekend as far as negative attitudes and concerns over the marketplace. Traders evening up some positions, taking advantage of the rallies that we've seen in the stock market especially, is causing traders to probably stand aside as far as investing in other commodities here, at least early in the session today. We've also got economic effects around the world from the Icelandic volcano that has been going on for several days now, basically stopping all air traffic in England, and it's said that it's caused a delay in 30% of air traffic around the world. So that's definitely have an impact on world economy, investor attitude, and concerns, and that's carrying over into the grain markets here this morning. The fundamental issues that's got the grain markets under pressure, and should have, and that is we're coming along with planting very well. Took a trip down to St. Louis here over the weekend, and driving up and down the state of Illinois, there is a lot of corn that's being put in the ground, a lot of corn in the ground already. Traders are estimating anywhere from 15 to 30% of corn planting on the USDA planted progress report here this afternoon. That compares to 9% on the 5-year average. So we're moving right along as far as planting goes. And the weather looks like it's going to be ideal for planting here for the next couple weeks, actually, when the balance of this week through Friday seems to be dry through most of the Midwest, then a chance for showers on Friday, Saturday, and then dry conditions for another week, and then some rain following that. So from a farmer's perspective, as one guy said here this morning, it's pretty ideal. We need some rain after we get it in the ground, and that's what it looks like is ahead of us. The corn, we've got technical action there that's could take us either way. We've had good strong closes on Friday in all the grains, but we've got resistance right now at 365 in the May corn, support around 355, and then at 350 with major support around 343. So we're in a 20-cent trading range right now. A breakout of that range either side could take the market in the direction of the breakout for probably another 20 to 30 cents. So something to monitor here this week. It looks like we're going to be opening anywhere from 5 to 6 lower here this morning in corn. In the soybeans, the tight stocks in the old crop continue to provide support, especially for old crop, and the spread between old crop and new crop has got a lot of attention here lately, so that has been a very volatile spread as well. Technical buying has supported this near-term contract. We took out the 200-day moving average on Friday, closed above it, well above it at 985. The 200-day moving average crosses at 974 here today. And also the seasonality and seasonal trend of higher bean prices into the June time frame is helping support that market, but again, a lower opening there today. In the wheat, the main thing we've got going there is the technical aspect, technical buying. We've got market closing above a several-month downtrend, above that 985 level on Friday. We need to maintain a close above there today. We've got support around that 985 to 982 level, and then again at 482 to 485, and then at 470 is major support in the nearby May wheat contract, with resistance coming in at $5. Planning our crop conditions there, good to excellent guesses. should be right in that 65% range, maybe a little less than that. It's hard to believe that we'll be able to maintain that high of a good to excellent rating as we go and get closer to harvest. In the cattle trade, we've got choice beef down 6 on Friday, select down 41. Cash cattle ended the week around 98 cents. That's $2 lower than the previous week. We expect the cattle to open mixed here this morning. However, feeder cattle should be positive here today, as lower corn prices usually means higher feeder cattle prices, especially at a time where we're at, where there is some profitability in producing cattle at this moment. The trend is still up in cattle. We've got resistance at 95.20 in the June cattle, then at 96, with support at $93 today. In the hogs, we expect higher markets there. We've had a great run in the hog market since the Hogs and Pigs report back in the last day of March. We've been up 15 out of 16 days, which is trend is up. What can you say? And it looks like it will continue that way. We've got good planting conditions, and usually when the farmers are in the field planting, they don't market as many hogs. We've got packers that need some hogs here this morning, so we're calling cash hog markets higher here today. And cutout values, not much change at only 6 higher here on Friday. Technically, we've got resistance at the 86.60 area. We closed at 86.15, and we got support down at $85. So pretty big range of support and resistance there. But a market that made new contract highs last week, we could do the same here today, because cash markets are pretty strong as well. So if you got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We got a big week ahead of us, a lot of things going on. Don't be afraid to give us a call. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning. Thank you.